Hey everybody, welcome back to another episode of From Boots to Suits, the podcast that is dedicated to all our service men and women who are in that often complex time of transitioning out of the military back into the civilian world. I'm your host, John Gowan, a former paratrooper in the 82nd Airborne Division, alongside my co-host, Mr. Rudy Scotetti. Say hello, Rudy.
Hello, everyone. Air Force retired.
And today we have a fantastic guest for you. Not only if you're a veteran, but also for those that are still in the military today. This podcast is especially important because we're going to learn a lot about our VA benefits and our VA loans and why you should be using your VA home loan while you're still in the military today. So if you're not and you're using your BAH to pay someone else's VA home loan, we're going to learn why you are making a huge mistake. Welcome to the show, Miss Bridgette Simon. Say hello.
Hey, y'all.
Hey, thank you for joining us. Thank you for being here. Army, you served in the Army, medically retired, and then you went through this whole transition phase and then realized I'm in the wrong field and I need to do something different. Walk us through that story.
So I got med boarded back in 2008. I'm originally from Ohio, but I was stationed in Georgia when my family decided that we were going to relocate out to Colorado because my ex-husband was the oil field. And while I was active duty, we purchased a house in Georgia using my VA loan. And while I was out processing, I was just excited to start the whole thing. So I didn't really pay attention too much when I was doing my out processing and learning about all the benefits and different things I needed to take advantage of. So we ended up moving out to Georgia, or from Georgia out to Colorado. And then my ex-husband got a job offer down here in Texas. And he was like, hey, you want to go back to Texas? And I was like, absolutely. I loved it down here when I was at Fort Sam. Again, being from Ohio, I hated the snow. So I was like, finally, somewhere where I'm not going to deal with snow. And so when I got out of the military, I used my GI Bill and I got my bachelor's degree in substance abuse counseling. Because when I was in the Army, I was a pharmacy technician. I saw the transition of soldiers coming to my window and pretty much getting hooked on the medication. So I was like, I want to do something to help my fellow soldiers and veterans and whatnot. So I went into counseling, but it didn't click for me whatsoever. And then after that, once I started having kids and stuff, I finally started exploring other avenues, networking and different business opportunities. And then I actually had approached me when we were going to purchase a condo. We were going to use them as our realtors. And they're like, look, we've been seeing what you've been doing. We think you'd be a great realtor. Why don't you get your license and be your own realtor? And I was like, okay, that seems pretty smart, you know? And then once I got my license and I started really trying to figure out like what niche and what people that I really wanted to focus on, I realized that there was not really any other realtors around here that were helping fellow veterans use their VA benefits. And so that was what I really decided that I was going to focus on, was to meet other veterans. I know what you're going through. I know what information I wish that I would have had when I bought my first house, and all the benefits that I've learned since then, now that I'm networking with other, mortgage lenders and other agents, and just talking to veterans, whether they're active duty or veterans that are trying to get their first home. And they're like, man, I had no idea that I could get into a house with zero down, or didn't realize that I could do this while I was active duty. So I was like, all right, that's what I need to do, is I need to get more information out there to either active duty or veterans as well. So that's what I'm doing now.
How long have you been in real estate now?
Last year was my first full year. So I got my license in the summer 2 years ago. And so I'm working on my second full year of being in the real estate industry.
Gotcha. How has that transition been? Like, what were some of the things that you didn't expect in the real estate industry? And then, also things that you expect that didn't happen?
I feel like there's so much misinformation out there. There's so many, not only loan officers, but agents that will sit there and try to steer veterans away from using their VA loan because they're like, oh, it's going to be so much more complicated, or people aren't going to want to accept your offer. And it's like, what? Like, what are you talking about? Or you have some big wig people that like Dave Ramsey that'll sit there and be like, using the VA loan is a horrible idea. And it's like, no, like, what are you talking about? So just really getting that information out there and letting people make their own decision. I think that's been the biggest hurdle, is that I'm combating misinformation to where that they've been told and that they've been drilled into their head of like, no, this isn't possible, or, oh, there has to be a catch to it. And it's like, no, there's really not. It's just, you have to know what avenues to go through.
Right. What do you think is the root cause for so much misconception or rumors or bad information on the VA loan, and why you shouldn't use it? Because you hear that all the time. It's like, the VA loan is terrible. You should never use that loan.
I think really it's just people's lack of knowledge because it's not as common. People are fearful of the unknown. So just because they don't want to take that extra effort to learn more about something that they're not familiar with, or they feel like, well, I wasn't a veteran, so why should I be teaching other veterans, or why should I be teaching my clients about this if I don't really know what I'm talking about? Or maybe even veterans, they're like, they're not a veteran, they don't know what they're talking about, they don't know how to use my benefits. So I feel like they're kind of battling against each other. Veterans want to use other veterans, and then so realtors, they're like, I'm not even touching this subject. I don't know about it. I don't want to learn about it, or they're just scared to learn about this other avenue. So they kind of take the easy way out, I guess.
Do you think there's hesitancy for active duty members to use their VA loan? Because what if you get orders like 6 months after you buy a house? Or
Yeah, and that's the thing is when it comes to the VA loan, you're able to use the VA loan more than once, and that's what a lot of veterans think is that it's a one time and done. And it's like, no, you're able to use the VA loan as many times as you want, as long as you're using it as your first year as your primary residency. And that's where people are like, well, what happens if I get orders, or what if I get deployed and then my family wants to go back home or whatnot? But that's the thing is that if you get deployed or if you get orders to go somewhere else, you're able to turn that property into an investment property, and then you're able to use your VA loan at your new duty station. So
Yeah, I think a lot of times we just the fear of I'm going to get orders and then I'm stuck with this VA loan that I can't get out of because I didn't know that my orders, just like anything else, my orders are going to, are going to X everything else out, and then I'm free to, move along and do this all over again, or whatever the case may be. And then also with that is you're so afraid of getting orders that you're going to give away, like you're going to be stuck with this house or whatever, but the chances of you renting that house is so high.
Exactly, especially being here in Military City. I mean, we have Fort Sam, we have the Air Force Base and whatnot. So, one, we already know, like, for me, I would want military families in my house because, that's guaranteed pay that they're getting every single month. You don't have to worry about a loss of job. But there's also certain agents, including myself, that there's programs and certifications out there called military relocation professionals, to where we learn, even if you're not a veteran, how the transition goes. And so being able to transition from one duty station to the other. And one of the things is to network and how to market your property, and making sure that your agent is aware of the different steps that it takes with, having the movers come in and having those stupid little blue stickers all over your stuff that you're going to find for years beyond years. But again, it's just making sure that they know, like, this isn't your one and done. So you're able to use the VA loan multiple times. If you do get orders, you're going to be able to use it within the next year. So don't worry about, hey, I still have my house in San Antonio, but I'm going out to Colorado. I'm going to have to rent at my next duty station. That's absolutely false. But also, because you're military and you get relocated, you're going to have your house close enough to the base that you have a huge pool of people that are going to be renting as well. So it's really a no-brainer that I wish more veterans would take advantage of, honestly.
So I kind of fell into that trap. So I had a house in Idaho, and I got orders down to San Antonio, and completely misunderstood how that whole thing worked. So I rented for 4 years because I didn't think I could, because I already had one VA loan. So how does that, like, I know it's a weird math, almost like your disability rating, right? Like, how the hell did you get to that percentage? But how does that work? Where I know there's a cap, right? You're allowed an X amount, 450,000, whatever that number is, but it's not pure money, right? It's kind of calculated with some wizardry in there. So how do they come up with that?
Yeah, so the number that you're talking about is called the entitlement. And so you can have multiple VA loans as long as your entitlement is under that certain amount. And right now, I think for 2025, the entitlement was raised to like $807,000. So you're able to have easily two $400,000 houses. And if you're looking on the outskirts of San Antonio, you can get a really nice house for $400,000. So even if you were to have one here, then have to relocate, you're going to be able to have those two VA loans at the same time and be under that entitlement amount. So you're able to have both of those houses.
And does that affect like the money down?
Nope. So you are able to still do zero down, still none of the funding fee. If you're going to be going new build and they're offering closing costs, then you're not going to have any closing costs. There's a lot of builders that actually have like military discounts or benefits to where it's only like $500 or $1,000 earnest money. And again, if it's the builder's actually offering full closing costs, then you're going to get that earnest money back at closing. If you're going to a pre-existing and you're able to get your agent to negotiate for concessions, I think you're able to do like max 3% concessions. If your closing cost is actually over, if your closing cost is under that 3% concessions, then you're still going to get that overage to where you could actually get your earnest money plus whatever that overage is, to where you practically got paid to buy a house. I had a client a couple weeks ago actually got more money back, and they're like, how did we just get paid? And I'm like, because the seller agreed to 3% concessions and you didn't use all of that. So closing. Yeah.
Wow.
Yeah, it's really
That's crazy. That's crazy. It's amazing how, like, I feel like there should be a class in the military of like how to use your VA loans, or how to, just the different options that you have. I think so many people are just stuck on, I'm going to live on base, or I'm going to get BAH and then go rent an apartment and, all this stuff. But the other side to it is being smart too with your VA loans, because you might say like, oh, I have this $800,000 and, I can afford this house because I don't have any bills right now or whatever. And then they go blow the whole thing on this huge house. But the next people moving in, are a family of 5, and, they can't afford, that. So they don't even look at that. So, it's, part of being smart. How do you go about educating some of the people that you work with, active duty and veterans around, the strategies of the VA loans and how to use them to their benefit?
Really feel like you have to have a good relationship with the other people that you're going to be working with. And for me, being an agent, having a strong loan officer behind me, that sometimes, because certain files are tricky, every person's financial situation and credit's very different. And so there might be a blanket like idea or information that's out there, but when it comes to actually working hand in hand with a family, a lot of times there's going to be certain road bumps where I come and I'm like, I'm not for sure about that. So being able to have a confident loan officer that I can reach out to and get some more actual information from is really, really a big thing. There is actually a mortgage company here in San Antonio that I like partnering with. It's veteran owned, and they actually put on seminars on the first week of every Saturday. We just did one a couple weeks ago. It was a builder summit. But once a month, they bring in these free events to educate not just active duty, but veterans on how to use your VA benefits. And he goes through all of the steps of like why it's smart to do it, how to do so, different creative financing. Again, being able to buy a brand new house every single year and then turning those previous ones into investments to start getting those multiple streams of income coming. I mean, those are things that I wish I would have done when I was active duty, because I already have that guaranteed income coming in from being active duty. Now, if I can get extra streams of income going on with these rental properties too, so that by the time I got out of the military, even if I decided not to go to work and just stayed unemployed with my disability rating and my monthly compensation from that, and then having that income coming in from the properties and stuff like that, I wish that's stuff that I would have learned about and done to put me in a better financial situation once I started building a family.
Do they stream those, or is it all just in person? Those monthly meetings?
Want to say that they're in person, but I know that they've always had cameras, so I'll definitely ask to see, because I want to say that they're at least recorded, because I know that they put out content and videos for like marketing and stuff afterwards, but I don't think that it's live streamed, but I can definitely ask.
Yeah, we definitely want to get that information that we can blast out there, because
It's really helpful.
That alone would have been awesome to know.
Yeah, the owner himself, he's a Navy veteran, and that's why he's so set on being able to be out there and educate people, because he's the one that actually brought to my attention about how Dave Ramsey was like, oh yeah, VA loans are horrible. And he goes into like explaining it why. Like he really does dumb it down. But he really does a really good way of describing and educating veterans and active duty as to like why this makes sense to use your benefits now while you're still active duty, before, instead of having to wait until you're a veteran to use your VA loan. I mean, he's a pretty cool guy. He stands up on stage barefoot and all, so it's definitely very entertaining to watch him.
Why do you think Dave Ramsey doesn't like the VA loan, or what are his things again? I've never paid much attention to Mr. Ramsey. So what are the things that he talks about that he's so negative against the VA loan?
I think the biggest thing that he has an issue with is in regards to like the down payment, because if you're not in the house for very long, or if you're trying, because it takes a little bit of time, regardless if it's the VA loan or any other down payment assistance program, it's not really that you're getting into the house for free. It's just that they're kind of rolling that fee into the bulk price of it. So the way Dave Ramsey looks at it is if you have it, then use it as a down payment. Like why would you not go ahead and put that off so that's not in collecting interest over time?
Right.
But at the same time, like military does not make a lot of money. So if we're able to get into a house without having this big chunk of money, why would we not keep that $20,000 in our pocket to do projects in the house, to build equity into the house, rather than putting $20,000 down to where maybe it affects the monthly payment by $20 to $50?
Right. Well, or even the misconception of I got to have $40,000 to put down on this house, so I'm going to continue renting to save up, when you could be using your VA loan and not put anything down, is also kind of counterintuitive for I get what he's saying, because of the compound interest and all the stuff that goes on and on and on, right? Like your 30-year note, you're going to pay double on your mortgage than what you actually financed. And that's scary to look at, but at the same time, why would I continue to be putting money into somebody else's property or into an apartment when I could be, purchasing a home? Another, I think, misconception or just not informed, I guess, is somebody like myself. I went through a time where I had bought a house when I was stationed in New Mexico. And at that time, the market started to kind of crash. A lot of people left the area. Two big companies had moved out of the area. And so I started renting it because I also ETS'd, within 2 years. And so I ETS'd and I was renting it out, and then my renter bounced, and then I was trying to sell it and all these other things. And I fell into a position where I had a short sale. And then I thought, that's it. I can never use my VA loan again. And so for so many years that we were looking to purchase a house and try to get back into house, and we were just throwing money away and renting and renting and renting, I could have used my VA loan, or I could have at least applied again to try to get a VA loan. But I just had this idea that I can never use this loan again because of that circumstance of, 5-6 years earlier. Walk me through like that misconception and how that's not true. You can still use, again, with the wizardry, the wizardry and the math and all that stuff. There's still options out there for you.
Yeah, it's the thing is again, yes, you can use it multiple times. Yes, you can have multiple VA loans at one time. But another thing that a lot of people don't realize is that they think that the VA loan, you have a minimum credit score, and it's not the case. It's normally the lenders that have a minimum credit score. The VA doesn't actually set a minimum credit score. So again, it's really case by case and what loan officer you're working with. Loan officers can get so creative on how they're working your file to make the payment work, to make the down payment work. So I feel like it's case by case. And if you're listening to somebody that doesn't really know what they're talking about, even for me, like on the loan side of it, I can give you the gist of it, the common denominator of it. But again, until you actually have your file and your credit in front of a loan officer that is more experienced to where they're like, hey, I've seen this before, I know how to get around this. Don't count yourself out, because again, home ownership is so much better than being able to, like you said, paying somebody else's mortgage or rent or whatever. So
yeah, I think in general that is great advice, because I think as vets we lean on each other for so much information instead of doing our own research, and then we don't know the qualifications of the person telling us. So then we're like, well, he said this, so I guess that must be true. So really doing your research and getting in front of subject matter experts. And not just taking other people's word for it.
Yeah, not Uncle Size. Yeah. That bought a house 20 years ago when he was drinking, a whole fifth of whiskey a day. I remember back in my day when I bought a house. Yeah, well, things. Like, all right.
Yeah, it's crazy. Everything's changed, and I'm sure, like, even from the time that you've started your real estate journey, like, so much has changed. Not only with the market. With interest rates, all these other things that are, factors, but even with the VA loan, like sometimes you get 1 point less than what the actual interest rate. So if it's at 7%, you might get a 6%, which is super helpful. And it changes the outcome of your payment, a lot.
Yeah, I mean, the interest rates are just constantly changing. I mean, even within a week, your interest rate can change. That's why I know sometimes they think it's a sales tactic between the loan officer, even the sales representatives at the new construction. But when they're saying like, hey, we need to lock this in as soon as possible, it's because they really do change on a daily, as well as different laws and regulations and builders and the cost of housing and all of that, this lumber supply and everything. I mean, there's shortages all the time. There's banks going up and down. So it's a constant evolving thing. So if I would have had a buyer's consult 6 months ago and looked at their stuff, even now it could be completely different. They could be in a completely different situation. And so it makes me so sad when I talk to couples and they're like, we've been trying to buy a house for years. And I'm like, oh man, what am I about to walk into? They've been trying to do this for years and haven't been able to. And then I sit down with them and they're like, this, and this. And I'm like, y'all are ready to go. And they're like, what? And then we go tour houses that night and then they're under contract and they're like, how did it take us 4 years that we've been busting our butts and working with this person and talking to this person? You literally not only sat down with us, looked at our stuff, took us to go show houses, and we're under contract all within 24 hours. They're like, this is so much easier. What happened? And I'm like, it's just some people get stagnant. And that's one of the things is that you should always be constantly learning, not just with the VA benefits, but as a real estate agent, period, or anybody in this industry, because it's so fast changing and constantly changing that it makes me so sad that people just kind of give up because they have to do a little footwork to get a little bit of information.
Yeah. Well, I think it's just, we've had a couple of nonprofits, on the podcast lately, and they've talked about how often veterans get discouraged from help because they've had to jump through hoops, or they've been told no too many times, or there's been this long process of, filling out this paperwork and this and this and this. And then they're just like, I'd rather just not go through this process again because it just takes so long. And I think the same thing in real estate, where you might have been told once or twice, you need to do X, Y, and Z, or the game plan from someone's grandma's aunt's cousin told them you need to put the next 2 years and do this. But you were really qualified from day one, but you didn't know because, again, somebody told you something that was way out of line, or from 2 years ago, because it doesn't even like you said, things change so quickly in this industry that you've put yourself 2 years out when you could have been investing in yourself. I'm sure you come across that all the time. Yeah. Is it more common than?
It really is common, not just when it comes to the real estate industry, but also just dealing with like your disability benefits and stuff like that. I know so many fellow veterans, and I'm like, well, when I sit down with the buyer consult, I'm like, are you rated? And they're like, no. And I'm like, well, why not? And they're like, it's so much work. And I'm like, what are you talking about? And they're like, I just don't want to jump through the hoops, and I don't want to have to go get my medical files. And I was deployed and I was stationed all over, and I don't know where my medical records are. And it's just like they just need that one point of contact that can guide them on what they need. And the same thing when it comes to the VA benefits. Again, like there's so much negativity behind it of like, oh, that can't be real, or that's only just for 100% disabled veterans or whatnot. Or people think that they have to have a disability rating to use their VA loan, or they have to just be a veteran and not active duty. And it's like, man, there's just so much. There's not enough information out there to where people they don't know. It's not that they don't want to do the legwork or find the information. They just don't know where to find it.
Right. Yeah. We're starting to see that more and more. The more people we talk to, is it's not about the legwork. It's about finding the right resource, or they've been told to go somewhere else, or just jumping through hoops. And at some point, you just get tired of doing it. And especially when it comes to your VA benefits as well. Like that is just a long, tricky process. And if you don't have the right people in your corner that know exactly what they're doing, and we were talking about this the other day. I've been at 80% for a long time, and I finally met with somebody, and they said, you have this rating. You should also have these other 3 that coincide with this, but they're not going to tell you that. And unless you're talking to somebody that actually knows, then you're never going to know that you should have had all these 3 as one bundle put together. And that probably would have boosted you 5 years ago over 80%.
Exactly.
And it's crazy that you have to jump through so many hoops, and you have to go talk to all these different people to figure things out. And then, like you said the other day, some veterans just don't feel like I need to go down this road because I don't feel like I've earned it. And that's not the truth. Like you've served your country. You definitely earned that. You definitely earned that rating. You definitely earned the opportunity to use a VA loan to be a homeowner in this country. Like that is the American dream, is to be a homeowner, to have the wife, the 2 kids, or the wife, the husband, the 2 kids, a car, a dog, the boat, like the whole 9 yards. Right. Yeah. And we always just, I can't afford a house right now, or I don't have $40,000 to put down on a house because Dave Ramsey said that I shouldn't use a VA loan.
Exactly.
It's so wild that we think this way, Since you started, how many veterans would you say are even active duty have you been able to help that had the misconception that they couldn't even get into a home?
In the past, since this is the start of my 2nd year, I have 6 under contract right now, and I helped currently a couple other are in the pipeline. And then last year, I would say probably about 20, 25 families just in the past 2 years. And that's the thing, is all of them, almost every single one of them were like, I didn't know how to do this, or this is my first time, or I didn't know that I could use it right now, or they didn't know about the 100% if you're rated to where you get to exempt your property taxes.
That's
huge. Mean, that's huge. I mean, that can drop $5 off of your budget every single month to where you qualify for a higher amount of house or a bigger house. And then some people think that they have to be 100% to be able to get that tax exemption. So being able just to give them that education, even if they're not ready right now, being able to give them this education of like, hey, make sure you have this, or if they don't even know how to get their certificate of eligibility, like me just being able to tell them like, this is how you go obtain this letter. This is how you obtain to start your disability rating, so that once you are rated, this is what you do once you are rated. So you can take that paper down to the tax office, the tax appraisal office, and get some type of exemption, even if you're not 100%. I mean, it can save $100, $200. I mean, that could be somebody's car payment or groceries for the week.
Yeah.
That's eggs right now.
Right. Or you go buy your own chickens right now for that.
Yeah.
But yeah, it's just a lot of just little things that could really help. Again, especially if they're on a fixed budget to where they're not able to work and they're relying 100% on their military benefits. Being able to know, like, hey, drop your monthly mortgage by this much, or being
Right.
able to refinance, or being able to actually still have another stream of income. That's something that I just helped a recent veteran. Was he was like, I feel so defeated because I'm not able to work, and I feel bad that my wife is the one working. Well, it's like, why don't you guys start using your VA benefits and your VA loan and get investment properties? And he's like, I can do that. I'm like, yeah. And he's like, so I can like contribute. And I'm like, yeah. And like just seeing his eyes open up and get all bright and excited that he's going to be able to contribute outside of just his normal like monthly disability rating, like that was such a special moment for me. And I was like, oh, that kind of like validated what I'm doing.
Yeah. Would you say the strategy is going to be very different for if you're looking into investment properties versus your primary residence? Walk us through that a little bit.
I feel like it's definitely going to be a big difference, and it's a lot easier for maybe a single soldier or maybe even just a couple that's married, because they're not relying on creating roots for their kids. Being able to sit there and be like, yeah, this is the game plan, and once a year you're going to go ahead and turn that into a rental property, and you're going to go move into another one. But with us being parents and knowing like how attached our kids get, like that parent guilt of like, oh, I'm going to keep uprooting my kids, it is a little bit different. So that's why you have to be mindful of like everybody's situation, their financial situation, but also their family situation. Are they going to want to sit there and use that VA loan once a year to start racking up those investment properties? Or are they just going to live in this house for 3 to 4 years, but make sure that's close to the military base, or make sure that's in a subdivision with a bunch of amenities, so that when they do start marketing it as a rental property, is that going to be what entices people? If they're going to be using it as an investment property and their target renters are going to be military people, you got to make sure that you're not going and buying a house to where it's going to be a $2,500 a month rental property, because we know BAH is not that high. You don't want to have it too expensive to where your standard military family can't afford it. So you really have to figure out like what's your intentions of that house. Are you going to be moving every year? Are you going to be trying to stay in it for a little bit? Are you going to stay in it here and then end up having a property manager and leaving the state because you're going to get orders somewhere else? It's really case by case, but those are definitely factors that you want to take into consideration. Those are things that I ask when I go to my buyer consult.
Rudy, you had an investment property a few years ago, right? You didn't do that under the VA loan?
No, I did.
That's why you couldn't buy a house in.
That's why I thought.
Right.
So when I lived in Idaho, I bought a duplex, and I lived on one side, rented the other side.
Yep.
And then when I PCS down to Texas, I rented both sides. And so then I ended up selling it so I could buy my next house, understanding the process. And now I'm kicking myself. I went on Zillow the other day. And,
saw how much of this now.
That was the worst mistake I could have ever made, was to go and research. No, I have a quick question here. So if you had your crystal ball right here and we're looking into the future, I know some people get hesitant to buy because, well, maybe prices are going to go down. You know, we hit a bubble. You know, we're coming off the COVID high of, you know, prices and stuff like that. Interest rates, you know, new administration, maybe they're going to drop. Should I hold? Or so for what you're seeing and talking to and the people in this realm, are prices pretty stable? Interest rates pretty stable? Like what's kind of the I guess what people are thinking?
I mean, right now the interest rates are up and down. I feel like everybody's kind of just waiting for the economy to kind of finally like start leveling out. They're guessing that by the end of summer we should see like maybe the low 6s, high 5s. But we were also, depending on who you ask, we were going to see that beginning of the year, and honestly that wasn't true. But a lot of times my best advice for somebody is, if you can afford it right now, do it. Because it's just like parenting. There's never really a right time to do it. So if you're able to afford it right now, do it. A lot of times, especially with these builders or certain loans, they'll allow you to refinance within 2 years if the rates do come down. So it's really a win-win situation, because they're offering that free refinancing because they know that the interest rates are so high right now. So they're really putting out incentives to see like what is it that we can do to get people into the houses. And that is a big concern. It's interest rates right now. So that's what you'll see is a lot of companies are offering free refinancing in 2 years. So what I tell my clients is wait until that 2 years, because they're also offering like buy downs to where it's like 3.99 the first year, 4.99 the second year, and then years 3 through 30 is going to be, you know, the 5.99. But if it ends up getting underneath by year 1, I tell them like, no, just wait it out until that year 2 to see if it gets any lower, because you can only do that free refinancing one time. But yeah, just watch what the interest rates are doing, and then being able to get into that position where the loan is able to be refinanced at that time to save you money. But it shouldn't go up. That's the thing, is that when you're locking in that rate, you don't have to worry about it ever going up.
Right.
So what's the positive and negative, or what do you recommend for new build versus, existing construction?
So new builds have such a bad rep right now, and almost everybody, when I sit down with buyers, they're like, I don't want a new build. And I'm like, but why? And then they start talking about it, and it's like, when you look at the new build, being able to have the full closing costs covered, the warranties that new builders offer. I mean, I understand that they say, they get slapped up and then the inspections or that the builders are doing bad, but that's why we bring in inspectors. I always recommend a third party inspector so that they can catch things that we can't see with our own eyes. So being able to get that inspector in, the warranties, a lot of them have like 3 different types of year term warranties: 1 year, 3 years, 5 years, 10 years. When you get into a pre-existing house, you're not going to have that. You're gonna be fixing stuff all the time, regardless if you have a home warranty or not. So a lot of times, for me, I feel like it's a peace of mind knowing that you're going into a brand new house, one that's never been lived in. It's customizable depending on the builder to where you get to make it your own. Being able to use the VA loan, so 0 down payment, hopefully closing costs covered, hopefully a low interest to where it's $500 or $1,000. I mean, what house can you get into where it's brand new? You get to pick out everything out, never been lived in, and you probably get that back. And then you know that for at least the first year, right before your first year, I tell my clients, hey, go hire another inspector so that when you have that 1 year, you can turn in that report and they have to fix everything again. What other place are you going to be able to have that peace of mind that you barely had to use anything out of pocket? Everything's going to be covered to where it's almost like you are renting because the builder is covering all of the damages and stuff like that happen. When it comes to pre-existing, I mean, some people do want like that character of the house, or they want sitting on land. So it really depends on like their preference. But for me, it's a no-brainer, especially if you're a younger family with a very, very small budget, or you don't have the ability to save up a lot of money to be able to go into a pre-existing house, or you don't have the knowledge to make those repairs yourself or the money to make those repairs yourself. I feel like the new construction route is the way to go, honestly.
Yeah, I would agree too, especially for a first time buyer, because a first time buyer is you're going to learn things about a house that you never have dealt with before, especially if you buy a pre-existing home. Like you said, you're going to have some things that you're most likely going to have to repair. And as a first time home buyer, like, are you really prepared to have to do all those things and also have some bankroll to take care of, some of those repairs? Your AC goes out, that could be very, very, very expensive. Yeah. What would you say? What is your recommendation on closing? Let me rephrase this. When you're closing and you go through that final, especially on a new build, you go through that final inspection, and then you find, you're, like you said, the blue tape. You're walking around with the blue tape everywhere. this, and this. If you stall closing because you're not happy with the finish of the house, how does that affect your lock-in rate and your loan and all that? Do you have to go through that process again, or is there an extension?
So when you're buying a new build house, there's going to be 2 different walks that you do. You're going to do the blue tape walk, which is when your agent, and then the construction manager literally, I mean, you put your shoulder up against that wall and you walk every wall in that house and you mark everything up. So then that blue tape walk and anything that's found then, and then you bring in your third party inspector to where they're inspecting, the HVAC, the roof. I mean, there have been so many weird random things that my inspectors have found. Then the construction manager gets both of those reports and has the third party people that are working on the house, whether it's the HVAC people, the roofing, the painters, whatever it is. And then you go through your final walk orientation, like your new homeowners orientation, where they're like, okay, these were the big things that we found. These were addressed. If you're not happy with it, you do not sign on that line. Like, plain and simple, I tell my clients, do not, because once you sign on that line and then you close, then you're going to have to submit for that warranty and stuff, to where they might drag their feet a little bit. So no, you won't have to do the loan or anything like that. They might have an amendment to where the closing date gets pushed back, but that's even on pre-existing houses. Like if something, because even on pre-existing houses, you still get an inspection. It's negotiations, whether you come down on the price or the repairs are happening. But even if you don't close on it on a pre-existing house, all you do is submit an amendment that changes the closing date.
Gotcha.
It's not a big deal.
Yeah, I think sometimes people, like me, myself, I'm going to speak personally. I was scared of our interest rate and all that stuff not being locked in if I had not closed on the day that we were supposed to close. And there's like several things that I was not happy with in the build, like on the roof, the way everything kind of lines up. They didn't do a good job of the tape and float. So it's kind of like a wiggly line on the tape and float. And I'm like, it's just an eyesore for me. And I should have not signed, but I was afraid of, shoot, if we don't, are we screwed? Are we, pushing ourselves out, or are we going to get out for this interest rate? Like, I think it was at 3.6 at that point in time, but then we ended up refinancing a year later and we got it down to 2.6. So we're like, we're never moving. Yeah, we got into a really good position. You know, and this was, God, what year was this? I don't even remember now. 2018, something like that. So it's just been a wild ride since COVID. And then, like you were speaking earlier, there's so many factors that go into what is that house going to cost. You know, how does the market, you know, affect not only the interest rates, but man, during COVID we had a lumber shortage, and I mean 2x4s were $5, $6, sometimes $8 at the lumber store. Like all of that goes into that house. Man, builders had no choice but to jack up the price, you know, during that time. It's just a wild time. Have you seen the market kind of level out since the COVID bubble and then the burst, and you know, now we're a few years removed from it?
Yeah, we're starting to see it even out right now, especially with the tax appraisal numbers coming out. 2023 has started to really seeing the difference of the numbers come down. 2024, you can see a big difference of numbers coming down. In 2025, it's going to be the same. But what you were just mentioning about like lumber and stuff like that, to where the builders had to increase the prices of the houses. So people were paying so much, or, you know, we had a shortage on houses. So people were in bidding wars and they were paying over what the houses were worth, to where that was frustrating for people trying to buy at that time. Honestly, people that were selling were super ecstatic. They were getting 50,000 over what they were asking or what their house was worth. But what we're seeing now are people that are being forced to move due to, you know, family issues, divorce, or job relocations. And now they're trying to sell their houses when they bought and paid too much for their houses. So now we're getting into a time where creative financing is really coming in play, whether it's VA assumable loans, to where it's really because they're able to come in and assume that 3% or that 4% loan that we're probably not going to see for a very long time, as well as short sales and stuff like that. So we're seeing the market starting to level out from that. But also what we're seeing is that when the appraisals are coming in right now, because we're still at the very last part of it, to where people had their houses listed based off of comps, but then the appraisals coming in and the appraisals less than what the loan is, to where the loan officer's like, we can't approve this loan. So now it's back to the negotiation table. Like, okay, does the buyer have, you know, $10,000, $20,000, $30,000 put on this if they really want this house to make it match, so that they're not financing over the appraisal? Or is the seller able to come down on price because it doesn't match? So that's where we're seeing right now is a lot of houses are going back on the market because financing's falling through due to appraisal.
I know when we were buying, we lost our house, I guess, but it was kind of when we were coming off the high of COVID, right? And so there were $60,000 over appraisal. So we went back and they're like, no, come out of pocket. I'm like, whoa, I don't know.
You're like, who has $60,000 sitting in there?
Well, why would I want to be 60 grand upside down on a house?
Exactly.
Like, right
That's
out
not
the
even
gate.
appraised at that price.
Yeah.
Like, why am I going to drop 60K is what you're trying to sell it for?
But we had done all the inspections, paid for all these things that happen. And then they're like, they wouldn't even budge a penny. They're like, no.
Wild.
But then by the time we got to the house we did, because you're talking about the bidding wars and all that, well, everything had cooled down. We got a brand new roof, and, you know, we were able to ask for concessions that would not have happened a year earlier, you know. So Comal County is one of the fastest growing counties, I think, in the country right now.
Yeah.
And
That's
so
insane.
what is that doing with prices? Is people still able to get their dream home?
They are, but I really feel like that's why we're seeing so many new developments here in New Braunfels right now, because, I mean, people and investors are paying attention to news reports like that about how, you know, New Braunfels is one of the fastest growing counties in the entire United States. So when you see a new development popping up, it's because they've already done their research of, okay, this is the part of town that's about to start blowing up. And that's why we don't really have a shortage anymore, because we have so many new builds coming in. But at the same time, people are like, oh, we're so tired of seeing these new communities, farms stop selling their land. But it's like, we got to have places for these people to live. And at the same time, the people that are so upset about these new builders coming in, they're mad about investors coming in and building new developments so that people can become homeowners, but they have no issues with these giant apartment complexes, to where you're literally lining those investors' pockets. So why are you so upset that more people are going to actually get to be a homeowner?
It's like San Marcos is like that.
Oh, yes.
It's just apartment complex after complex.
Yeah.
But I heard Oklahoma is really nice this time of year. So if anyone's thinking about
If anyone's thinking about moving, go to Oklahoma.
Yeah, go over there. We're full.
Yeah. No, it's crazy though, because like just down the street from us, there's a whole another, I don't know how many hundreds of houses going up, and I always
city over there.
Yeah, and I'm like, man, I can't even make a right turn out of this neighborhood getting on the main road to get into town, you know. It's like, can we fix the roads first? But
Oh,
it took them, we've been here for 6 years, and it literally took them 6 years to fix this road.
Yeah.
The Klein Road. Yeah, that
Yes,
bridge
that
was a
bridge.
year. I was like, why is it taking a year?
It's a little space.
It really is. What do you see in the future, you know, for homeowners? And, you know, we're predicting interest rates to go down a little bit. Do you think they will go down a little bit and continue to go down, or do you foresee them kind of going down and then laying flat for a while?
I do. I feel like they're going to get to the fives and probably stay steady, just because at that point our economy will be able to support that. Until we get the cost of living down, though, I feel like we're going to start seeing a lot more like multi-generational houses, because people are living longer. Either the kids are staying at home longer, or parents are moving back in with the kids to help with like grandparents and stuff like that. So I see already a couple builders that are starting to build houses like that, where it has a casita in the backyard, or it has a dual entrance or dual masters downstairs. I think we're about to start seeing a lot more of that to make housing more affordable as well.
You know what's crazy though? We talk about interest rates, right? Can you believe it? They're up to 6%. But in the 80s, it was double
So
digits,
high,
and
yeah.
that was normal.
Yeah,
Houses
tonight.
were a lot cheaper though. I
Oh,
think,
yeah.
you know, I couldn't imagine $1,000 home at 14%.
Mm-mm.
Like,
Yeah. No, at my parents' house, like, I think they paid like 60 grand for it.
Yeah.
This was the 70s, I want to say, something like that. Like, they didn't pay like that much for it, for their home, but
Mm-mm.
you know, their interest rate was pretty high.
mhm.
Still, like, even my sister, like, I think they bought the house next door to my parents. I think it was like 120 or something like that, and their mortgage was like $600, $700. I'm
Yeah.
like, geez.
My childhood home, I think, because I'm nosy, I like to look it up on Zillow and stuff like that. I think my parents bought it for like $80,000, and now like you see it on like Zestimate or whatnot, and it's like $220,000, and it's
That's
like
wild.
it's insane.
How accurate is Zillow and some of those? What's the other one? Red something?
Redfin.
Yeah, Redfin
Yeah.
and all those. Like, they're constantly calling you and
Yeah.
offering you money.
It's really not what it is. Zillow is one of those bigger investors that, you know, is kind of like a blanket over. And that's one of the things that just makes us cringe. Just in like, well, my house on Zillow is worth this much. And it's like, no, it's not. I promise, no, it's not. What they're doing is they're either trying to inflate it because Zillow has their own realtors. And there's certain realtors even here in town that they look really busy and all the things, but it's literally because they're paying for the leads from Zillow. So Zillow's literally undercutting realtors by also getting money from realtors by buying their leads. And they're really trying to eliminate this position, honestly, overall. So a lot of times we try to steer away from realtor.com and Zillow because the numbers aren't accurate. So it's us having to combat misinformation, but also it's really an easy out for a lot of people that are supposed to be, you know, creating those organic, natural relationships with clients and stuff like that.
Right.
And they're not.
Yeah, I think that was a huge one though during like the COVID time frames. I think it was Open Door and Redfin were like
Yep.
the two big ones. And like they were literally sucking up people's houses and making it like this dream come true where like there's no, like, we're buying the house from you. You don't have to do anything. We come out, we appraise it, we give you a check, and
Mhm.
you're out of your house.
Mhm.
And like people were jumping on that. I was like,
Yeah.
this is silly.
Yeah. And they undercut you by thousands of dollars, like based off of what your actual house is valued at. They really targeted people that were in a hardship and that they knew that they had to sell, and especially in like a quick sell too. But anytime that you get any of those people that approach you about like the quick sell or just let us buy your house, I guarantee they're undercutting you by $50,000 to $100,000 just to make a quick profit. But it's because they have all of this money sitting there that they're able to do it, because again, those are those big investors that are buying up tons of properties and land and all this stuff. The same people that people are complaining about, those are the people that they're selling their houses to.
Yeah.
I've noticed that. I got some property in Floresville, and so about once a week, every couple times a month, I'll get a letter
Mm-hmm.
like, "Hey, we'll buy your property right now for $40,000." I'm like, "What?" What are you doing?
Man, my dad years ago, he owned property down by Toyota where they built the Toyota plant down in San Antonio. And so it was like an acre and a half. It wasn't a whole lot of land. And at that time when Toyota was moving in, they were buying up everybody's land and they were offering millions, like $1 million per acre kind of
Yep.
thing. And some investor came to literally came knocking on my dad's door, offering him like $500,000 for his acre. And my dad's like, no, they're buying everybody up at this price and I'm going to hold on. It was like maybe a mile or two down the road that they cut and they stopped buying, and my dad has regretted that decision to hold on to that property since then. But I'm like, yeah, you got to know when to hold them and know
Yeah.
when to fold.
It's all about Texas poker.
It's all real estate kind of is, right?
is.
It kind of is. What are some of your biggest takeaways in the last year in this transition for you? Because you like completely uplifted from what you went to school for. You went into real estate and just a whole different lifestyle, right? And I think a lot of people, I think there's also a misconception of going into real estate because you're like, oh, I get to work for myself. I get to set my own hours. I get to do this. I get to do that. And, everybody wants to buy a house. I can help everybody.
Yeah.
I think that's a big misconception too. I've seen a lot of people, even like people I went to school with that have gotten into the business and then like within a year have fallen out of it, For you, how did you set yourself up for success in this transition? Because it's a big transition from what you were doing into this. And then also find success and driving pipeline and ensuring that not only are you educating your buyers, but you're helping them get into homes. Like, how did you do all of that in such a short period of time?
Well, before real estate, I was in network marketing. So I feel like I kind of already learned how to meet new people. I mean, that's the biggest thing with real estate is it's relationship building and meeting people. You can't stay at home because then you're not going to meet anybody. I will say social media is a big, big part of my business and my success because I'm not afraid to get in front of the camera and not to put down any seasoned agents or anything like that, but times are changing, and especially when it comes to first-time home buyers, a lot of people are that age group of first-time home buyers are early 20s, maybe even early 30s, but that's kind of pushing it. So where is the bulk of those first-time home buyers? They're on social media. And so learning to use social media and putting myself out there to where people don't just look at me like, oh, this is just another real estate agent, but being able to put myself out there and be personable to where they feel like they know me, they feel comfortable enough to trust me with maybe some of these. And people like to say I'm kind of embarrassed about my financial situation or whatnot, because I mean, we do have to get to the nitty gritty. I need to know, like, what's your financial situation? What's your credit look like? And so I want them to feel comfortable enough with me. So I have to put myself out there to where they feel comfortable to talk to me, and that I'm not going to judge them, or that I'm not going to just brush them off and be like, oh, you're not going to be an easy file, that sorry, like, you're not worth my time. So being able to put that out there and showing that, hey, like, I'm up for a challenge for one. That's the fun part for me, compared to there's other agents that they're like, oh, I've been doing this for 20, all you social media junkies and blue. It's like, whatever. Like, why do you have to put other people down while you're doing something? But learning and being able to adjust as things go, because that's the thing is with real estate, something that happens today is not going to happen tomorrow. It's always something different. And that's a little bit being able to work under pressure and knowing that something could change at any point in time, and just being able to pivot when I need to has been a very, very big advancement for me. I feel like being able to not be like, oh my gosh, this just came up, or this bad inspection came up, and just getting all flustered. I'm like, all right, what do we do? Let's face it head on. And being able to just stay calm under a stressful situation, which I kind of feel like the military helped me with, where I'm like, it's fine, like, we'll figure it out. And then like my clients are like, oh my gosh, I'm so like, and it's my job to calm them down and be like, hey, like, no, like, we got this. We got to just pivot and go over here. Or let's change the course of plan. But really just being down to earth and being personable to where they know, hey, I'm right next here with you. Like, I've been through this, and if you have questions, like, I'm here to fight for you. And just letting them know, like, I'm on their side. They're not just another file for me. And that, hey, if it takes us 2 days, if it takes us 2 weeks, if it takes us 2 months, or even a year, my job at the end of the day is to get you into a home that you absolutely love. Because again, this is a relationship building business. That's not the end of my relationship with you. My relationship and my business also really heavily focuses on referrals. So I want to make sure that you're happy with my job, so that one, you will use me again, but also for referrals. And again, keeping that relationship going. So again, it circles back over to social media. Like, I want to be able to get to know you and your family and your friends, and I want you to get to know me. And that's something I feel like so many people kind of mess up with, is they look at it as a transaction. They look at it this short time and this short relationship. And for longevity and to be able to have a long, successful business, you have to be building those relationships and being able to reach a bunch of people all at once. And because of social media, you're able to do that.
Yeah, the game has changed for sure because of social media. What it's done, good, bad, or indifferent. Like, it's here and it's not going anywhere. You better, get used to it and learn how to use it, to your advantage. What is work-life balance like for you? If that's even a thing.
What's that? So there was an analogy that I heard a long time ago that it stuck with me so long, and because you said balance, regardless of just the real estate stuff, and also I'm a wife and I'm a mom, and and all the things, and I have friends and family. It's not really so much about balance. It's really about looking at it as like a band, like an orchestra band or whatnot. So where it's like, I'm not trying to find balance because balance means that everything's getting like the same amount. It's more like it all has to work together. There's gonna be some days where I'm gonna be heavily on family, like my girls are in cheer. So there might be a weekend where I have to be at a cheer competition. And then there's other times like my husband's in the oil field. So he's gone for 2 weeks at a time. So if he's working in Midland and I don't have to worry about doing the wife duties, that wife duty is gonna obviously tank, and I'm gonna be able to put more time into either my kids or my friends or my work. So being able to, have the flute section over here going really hard, and you got the trumpets over here and you got the drums over here. It's not about them all having like the same volume on the microphone. It's about them all working together to create a beautiful song all together. So balance, absolutely not. It's just really about learning how to delegate and juggle and being able to just make it all work at the same time.
Great metaphor. I like that. I'm gonna have to steal that. I may even take credit for it too.
How about
Just play the flute today.
Yeah.
Just play the flute.
Yeah.
So something we had talked about, and it's probably something you could probably really speak to, is basically you're in business for yourself. So how damn scary is that, right? We've gone our whole life knowing on the 1st and 15th, I am going to get X amount. I know how much my paycheck's going to be.
Yep.
And we talked about doing something like that. And I'm like, if I got paid $15,000 one month, I'm going to spend all $15,000 of that. And then the next month I get $2,000, right? So how do you look at that? How do you prepare yourself for not knowing, oh, it's a really good month this month and last month sucked? Like, how do you figure that out?
It's really, especially because I'm just now coming into the full-time like adjustment of like really figuring out how much my standard expected monthly is. But even then, like I can do amazing this month. I have 6 closings coming up within the next month. And then 2 months from now, as of right now, I don't have anything. So it's really, for me, it's motivating because I know people hate this word like hustle, but for me, that's motivating for me. And I'm like, okay, I don't have anything on the books for May. So I want to go ahead and start getting stuff in the pipeline right now. But I feel like that's why so many people don't last in this business. I think I saw a statistic that last year, 71% of agents didn't even close a single deal. Because it was a really tough year because again, they're stuck in their ways. They're not willing to adapt and overcome and learn new things or jump on new trends that are happening. So I feel like you're really going to start seeing over the next couple of years, the people that are really willing to adapt and to form to whatever they need to be. But you also see these other agents and I'm already seeing it because I see people that got their real estate license the same time I did. And they got like that 1 to 2 closings in the same month. And they're like, oh, I just made $20,000, and they blow it because they're living outside their means, regardless of what industry you're in, whether it's, real estate or oil field or military or whatever it is. People they get excited and they're just not smart with their money. I feel like that's just honestly probably this generation of, I got money, my bills are paid, let's go spend the rest of it. And I'm guilty for it.
Honestly, I don't think that's generational because I think that's me. And that's why I stay away from
bills are paid, let's go on a trip. But I feel like just being able to get with a CPA to make sure one that your taxes are where they need to be, and then also a financial planner, being able to learn like Edward Jones or whatnot. My husband's linked up with that so that now that we're both starting to get stuff paid off and we're starting to get investments and stuff like that, we know that this type of income isn't going to last forever. So being smart with it and setting ourselves up and our family up for success in the long run while the money is good right now, I feel like is what we're doing right for once.
Yeah, that's great.
Yeah, and then I think because you guys are like net 60 sometimes, right? Depending on when you start the deal, when the deal closes, it could be 60, 90 days out from your first paycheck, understanding that, yeah, I just got my license, but I've got to go prospect. I've got, I got to go get all these other things in place. Am I going to work for myself? Am I going to go under another, group of realty company or, work under a broker, all those different things that you have to kind of figure out, but then you're still 60, 90 days out. And I love the way you're looking at it is I don't have anything in 60 days. I've got to go prospect and do all that work because what I do today is going to pay off 60 days from now. And then I got to start that cycle again. Exactly. It's a sales job. It's, and you're in business for yourself and you got to continue to do that over and over and over again. And that's not everybody's cup of tea. Some people might find the excitement in the first, 30 days, 40, 60 days, whatever. And then it's like, I got to do this again.
Yeah.
I got to do this again. Yeah. It's kind of like military recruiting, man. It never stops,
Nope.
Except for the Air Force. Those guys never worked.
Well, because everyone wants to join, so they don't have to work.
Yeah, that's exactly it.
They all come to us.
Yeah, that was exactly it. Like we used to always joke, the Air Force guys, the fiscal year would start, and then by like 4 or 5 months in, like they already met their quota for
Yep.
the year, because everybody wants to go in the Air Force. No one wants to go in the Army and the Marine Corps,
Mm-hmm.
and and so like we're actually out there, recruiting all day and
doing the work.
prospecting and doing area canvassing and all this other, old school, marketing strategies, right? And it's like, okay, I got my 2 for this month, but now I need 2 for next month, and then now I need this crazy, like certain specific height ASVAB score. All like, where am I going to find this?
It's really depends on discipline, and I feel like that's also any business, any type of business owner. I feel like you have to have some form of discipline, because you don't have somebody telling you like when you need to be checking in or clocking in and clocking out. But I also feel like that's where your broker really comes into play, or your mentor. There's a lot of these big name brokers and stuff like that people go and join right out the bat, but a lot of agents are part-time, and I really don't know how they're part-time, because like you said, like there's a lot of expenses also. Like you're paying your license fees, and you're paying to be able to be a part of the board of the MLS to be able to access when you're doing searches. NAR, which is the National Association of Realtors, like there's so many fees and stuff like that you have to pay. And plus, on top of that, you have to have your continuing education, certification, and so many credits to be able to renew your license. And all of that costs money on top of everything else, whether you're doing your listing signs and your business cards and your headshots. I mean, there's a lot of money that comes into being a real estate agent, and to try to do it as part-time, I don't understand how people do it. So you have to be really disciplined, not just with your time, but also with your money.
Yeah. I think it's definitely a lifestyle, right? Just like anything else is. But I mean, if you're going to go to a job from 8 to 5 and be unhappy, and you got that hustle mentality, why not go in real estate? But also know that going into real estate, you're going to compete with a lot of people, and you got to be on your game. You got to be able to take some tough times, and you also got to be able to get creative in your strategies and how you're going to approach different things. And there's no right way of doing it. And I'm not in real estate, and I would never go into real estate. I'm too scared to go into something like that. I just don't. I think I could have conversations. I think I can go market, and I think I can find people. But I did like. I would be the person that spends my money the first month, and then I think it's all going to come to me, and then like just hate it. So
well, that and just the being able to de-escalate, right? I know how I was. I mean, that's a lot of freaking money. You're about ready to sign a lot of money away, and so you get like bridezillas, on closing day, and you got to be able to, thank God my realtor was chill, because we had a bomb drop on us like an hour before closing. They said, "Hey, you got to come up with $8,000." Because of taxes. And I was like, whoa. And they're like, yeah, you need to have it in an hour. So yeah, there was a bit of stress, right? And he was able to, and I don't think I would. I probably would snap back. I'd probably meet him in tempo, right? Like, this is crap. And we'd both be pissed going into it. So it takes a good temperament, bringing it down. Curiosity. If someone wants to buy a house in the next 2 months, how do they reach you?
So they can find me online on Facebook. Like I said, I'm all over social media, but I also put my phone number out there. I know sometimes people don't want to comment or interact on social media just because it is a lot of personal stuff. So I just tell people, text me or call me, whatever you want to do, and then we can meet in a place. I do a lot of coffee shops where I like to go meet up over at Tipsy Cow, because a little bit stressful situation, but let's get you some ice cream at that time. And we kind of go over like just the very bare basics, like what does your credit score look like? What's your income look like? Do you have any money set aside, just to really kind of get a ballpark idea? Are you going to go pre-existing, or are you going to go new construction? Because that's going to determine what lender I get you with. If you're going to go new construction, we're probably 9 times out of 10 going to get you with the in-house lender, because they have better incentives for you. And I don't want to waste my outside lender's time if they're working on your credit and getting you all ready to buy a house, and then you're like, hey, I want to buy a new build, but they're offering better incentives. So I really try to interview them to try to see like which way we're going to go. If they're going to go pre-existing, then I link them up in a group message with my lender, a couple preferred lenders. So if they have a preference, if they want a veteran, if they want a male, if they want a female, I kind of get an idea of like who they want to work with, who would they feel comfortable working with, and then approval going, because the market is starting to pick up. I don't want them to go find a house that they really like, and then we're waiting for the pre-approval or stuff like that, because you need that to submit the offer. So I make sure that their financials and everything's in line where it needs to be. And then we kind of hit the ground running and going showings. And again, we could find something that day, or it could be a couple showings. It could be a couple weeks. It could be a couple months, but it's really just case by case at that point.
Yeah. Well, we'll definitely make sure that we plug you in. What company are you?
I'm with RD Realty out of San Antonio and Stone Oak.
thank you so much for joining us.
Yeah.
We know you got to get, we could probably talk for another hour, but we know.
There's
I
a
know
lot
you're
to
about
talk
ready to go sell some houses.
Yeah, I'm about
right?
to go show some
You gotta go
houses.
show
Yeah,
some houses,
to
so
some veterans.
We
Yeah.
gotta let you get out of here. But thank you so much for being on here.
Yeah, of
So
course.
much information that you've shared, and we wish you all the best of luck in
Thank you.
2025 and the best success this year. And
Thanks for having me.
yeah, we're here anytime. So if you want to bring more friends and have a conversation, we're here to.
Yeah.
Absolutely.
I would
help
love
our
to bring,
community.
honestly, I'd love to bring Rev Mortgage on here, my loan officer, and let them give a little bit. Because like I said, I mean, they're big hitters and they're a fellow veteran company and stuff like that. So I feel like they're really changing the real estate game when it comes to San Antonio and doing those free seminars and getting that
That
free
would be-
information out to people.
That'd be amazing if you
Yeah.
could connect us.
It would be great. Chris would be
great.
great. He's the owner of Rev Mortgage. Like,
Yeah, if you could connect us.
Yeah.
Awesome. Well, thank you so much
Of
for being
course.
here.
Yeah.
We'll see you guys next time.